All right, what is going on? It's Nate back with another video. Today we are on the charts. A lot of people seem to like these videos, so I'm kind of just going to go over like market update, situation, how things are looking, what we can expect. Just kind of like an overall, I guess, recap slash summary of what's been going on, what I think is going to happen, what's possible to happen. Um, yeah, it's just going to be a whole lot of stock talk. So hopefully you guys are interested in that because that's what you're getting. So first things first, this is SPY, right? S&P 500. This is the overall trend of the market. You can see we've been taking a dump, right? I mean, look at holy smokes, look at Friday, right? I mean, it's just been red, 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 red. And oops, I didn't mean to grab that line. Let me go ahead and delete that. And this is not ideal, right? I trade breakouts. I trade stocks that have momentum. I trade stocks that are breaking out and going higher really quickly. Well, that's not really happening when the market's taking a dump, right? I mean, it's down at 554.11. It was just at 612. So what is that? We got about a 10% move to the downside in the last month, um, which is pretty significant. So let's just kind of do an update. So what happens to me during this time, right? Most people who are holding the S&P are down about 10% on their accounts during this time period. I think I'm down in the last month about 1% or 1.5%, maybe. So yeah, when the market falls, I really don't get hurt. I'm not making much money if I make money, but I'm not getting killed like as if I was just holding SPY. So that's kind of the logistics of it, right? But also, a lot of stuff is not breaking out because if the market's going down, well, how in the world are we going to have breakouts, right? Let me pull up what my P and L is, and like what my last month has actually looked like. I believe it's about a percent or two. P and L, 1 month. Yeah, so I'm down 2.4% in the last month. Um, and most of that came this week. So before this week, I was only down 0.2% during all of this because I was able to hit some good ones throughout here. But then this week, I think I got stopped out of every trade. But that's what happens, right? So I got stopped out every day this week, and I'm down less than 3% of my account in this entire month, right? So during all of this, where everyone's been losing sleep, I'm down like 2.5%. So pretty much nothing. Um, but yeah, so a lot of people get scared about the downside for the strategy. I mean, I'm just being honest with you. Yeah, the last month I'm down overall, but I'm down 2%, right? That's pretty much nothing because I can make 10, 15% on my account in one trade. So then let's kind of talk about some setups I have had this last month. So I had Root. I bought this on March 11th, which was somewhere around in this range when it broke out on earnings. And then it continued higher, continued higher. I got profits on this one, and then eventually we sold it down here, and it fell below the 10-day, right? So that's why you sell it when it closes below the 10-day moving average, like I did, because it usually just continues lower from there. I also had QBTS. This one did pretty well. I bought it here, and so I was up pretty good here, secured profits, and then I moved my stop loss to break even. And then I ended up selling the rest of the position on this day. And then you can see it continue lower from there. So that's why my selling rules, I stand behind these. I mean, I'm not going to say I made up these rules by any means, but the strategy I follow, we sell on a close below the 10-day moving average. And as you can see, there's a reason why, because it works. Because once it breaks that point, usually it continues quite a bit lower from there. So yeah, that's kind of the market. There hasn't been much. There really haven't been many opportunities. I haven't really missed out on anything. There just hasn't been anything to begin with. You saw the market was pretty ugly. SPY's really ugly right now. But yeah, so let me just show you guys. I know it's gonna be backwards, but um, yeah. So you should be able to see. So that's the last 1 month. I'm down 2.46%. Um, yeah, so I'm down a fourth of what the market is down. So I would say that's not too bad. And that was with a mistake I made on Friday. I over risked on a trade. I did the math wrong, and so I lost an extra. What would that be? I probably would only be down about 2% if I didn't do that. So I mean, stuff like that happens. I mean, I try to be as much of a machine as possible, but I mean, you're still gonna make mistakes. It's life. So, anyways, yeah, I'm down 2.5% since the 10% decline. And so, I'm just gonna be real. Obviously, yeah, it's not. I'm not on here saying I've been making a ton of money during this time, but I have been. I'm not down as bad as the market's down, and so if my downside is not as aggressive as the markets and my upside is 10 times more aggressive than the markets, you make a whole lot of money during this with this strategy. So that's really what it is. And so we're gonna make the most money during these time periods when we're going up, when we're breaking out, right? Especially like times like this, where you can see we're just breaking out straight up. That's when my small cap, not small cap, but like individual stocks are just overall going to be breaking out and setting up a lot better than they are right now. I was getting hopeful around here. I thought we may be looking for new highs. I thought we were setting up again. Clearly, that wasn't the case. It was pretty ugly. Um, but yeah, so honestly, this week, I probably, because you're not, the rule of thumb with this strategy is to not trade it when the 10 and the 20-day moving averages cross and the candles go below it, right? So from this point on, you really shouldn't be trading, which I honestly should have listened, but you can, right? So instead of not trading, I just decrease my risk to a 0.25%. So normally in a good market, I'm risking 1% per position. But recently I've been risking a 0.25%, and I was still catching winners. I mean, this last week really is what got the whole 2.5%. I think before this week, I was only down probably, yeah, a quarter or a half a percent in the last month. So I mean, that's just kind of how it goes, though, right? So obviously, you can see why, because we got a bunch of fake outs here. It looked like we were breaking out and going higher, and then everything just dumped on us. So that's kind of how it goes. We ran into the moving averages. Should have waited until after this occurred to be entering trades once we saw signs that it was breaking above this 200-day moving average, which is very strong. So if it's running into it, usually it's not going to be a good sign, and it's going to reject at first, which it did. So that's kind of just, yeah, a recap. I mean, the strategy, I stand behind the strategy, but obviously you're not going to make money every day. I mean, it's a stock market. You're going to have red months, but you're going to have really green months. And so if your red months are 2%, you're down 2-3%, and your green months, you're up 50, 60, 70, 80, 100, 200%, whatever it may be, um, you're going to be very profitable. So yeah, I just wanted to kind of be real. I mean, that's kind of the update. The market's been dumping, um, and I've kind of stayed flat. I'm not really down much. I'm actually very happy with my performance, and except for this last week, that's what I would change. I told myself I was going to stop trading, but there was some really good setups that I figured a 0.25% risk was worth it. Um, and yeah, I lost, but I'm down not much at all. So I'm. It's not like that's what's so great about this. It's like I'm able to get good position in these plays, but I'm not risking much, right? I'm like, oh, this looks really good, but the market's really bad. Okay, I'll risk a fourth of 1% on this trade. Oh, it stopped out. Okay, and right? Oh well, because when I hit trades, like I know I've talked about it many times, but BBAI, right? So I hit trades like this. I mean, at one point I was up 20 something percent on my account just from this. 20% on my account just from this trade. And so it's like, okay, if I'm down 2% after a month of declining market, but one green trade gets me 20% on my account, then what do I care, right? So that's kind of what it comes down to. Like, yeah, you're gonna have months where you're red or even or slightly green, but then the months where the market's good, you make just stupid money. So it's really a game of, you have to be full throttle when the market's good, and then when the market's bad, you have to really, let off the throttle. And so I did. I was doing a 0.25% risk. This week I got faked out, but I've seen this many times that when you first run back into the 200-day moving average, it rejects and it will likely fall back down, and then it'll attempt again, and then that's when maybe when it'll break through. But you should never really trade breakouts going into the 200-day moving average. I've actually just learned that the last few days on someone I was studying. He was talking about that, and then I realized that's exactly what we were experiencing because that video I was watching was a couple years old. But yeah, I just kind of want to do like a market update, but that's the reality of it, right? So, like I said, market's down 10%. I'm down 2.46%. And then when the market rallies, I'll share with you guys what percent I'm up. But I guarantee you, I will significantly outperform the market. And I don't mean that in an egotistical way. That is just a way of confidence. I have confidence in the strategy, and I know that I'm gonna do very well coming out of this correction. Because coming out of the corrections is where you make a lot of money with this strategy. You could see since we had another break below the 200-day moving average was down here, and it was pretty similar. And look at what move we got after that, right? I mean, we went up for 6 months almost. We just went pretty much straight up, and so that's what we're seeing here. I mean, can I predict that we're going to have exactly this? Absolutely not, but it's likely, right? Every time we come in through a correction, I mean, the U.S. economy is not just going to fail right now. So the corrections are the time where we just kind of study, we learn, and you figure out how you can capitalize more on the bull run. And then during the bull run, you just go pedal to the metal, and you make as much money as you can. And then when it starts showing signs of weakness, you let off the throttle, conserve your money, save your profits, and then you repeat that. So yeah, that's kind of an update. How I trade during a bear market. Overall, I just decrease my risk to 1/4%, or I just don't trade. Up until this week, I was pretty even, so I wanted the market experience, so I was perfectly fine risking 1/4%, because I was like, you know what, I'm not making money, but I'm not losing money, and it gives me time in the charts, which is what I want. But then the last week I got faked out, so I lost. I think this week I was down 2%. Alone. So if I would have listened to myself, and just not traded until it came above the 200-day, then I would have done a lot better. But still, only down 2%. I mean, 2% is literally nothing. There's 2% fluctuations in a day on this. Let's see, what was this? I don't know. I'm not even clicking on the right one. I guess it doesn't tell you. Anyways, yeah, so that's kind of just, I mean, it wasn't a very exciting video, but I'm sure a lot of people are like, if you're trading breakouts, how do you make money when the market's not breaking out? And so that's the truth of it. During these times, you're not really making money, but you're not really losing money. So if you have a strategy where the market tanks and you're pretty even, and then the market goes up and you 10, 20x the returns that the market's getting, or even more, then you make a lot of money. Trust me. So yeah, if you're interested in any of this, I mean, if you want to know more, if you want to talk to me about it, if you're interested in joining my group, feel free to text me or DM me, whatever it may be, and we can talk. If you're just interested, I'm more than happy to talk to you guys. And if you want to join my group with the one-on-one, I work with you one-on-one. I teach you the strategy. I completely broke it down into everything you need to know. I give you my exact layouts with all my scanners. And I tell you everything I do. I tell you every trade I take, everything I sell. So, I mean, it really doesn't get any easier than this. And the bull run coming out of this is going to be ridiculous. So, don't miss it. And if you enjoyed this video, leave a thumbs up. I know it was a little bit slow and a little just information overload, but yeah, I just kind of wanted to make a stock video. So, yeah, thank you for watching, and I'll be back tomorrow with another video. It's March 29th, guys. We are on day 29 of the March Madness. So you know how we do it. We stay consistent. We're not gonna fail. We're not gonna give up. So yeah. So thank you for watching, and I'll be back tomorrow.